I know this is a high interest savings accounts video again, but hold up. Wait a minute, because this time it is not bad news anymore. It is really good news because Standard Chartered has raised its interest rates for the bonus saver account and it's up to 8.05% per annum on the first $100,000 of deposit. Really, really good news, right? Because it is 0.5% per annum increase across the board on all their bonus categories. So in this video, we'll go through the details, how to be eligible and get the optimal interest for your own situation. First of all, if you do not have a Standard Chartered bonus saver account, in fact, if you haven't cancelled one or held one in the last 12 months, you will be eligible for the sign up welcome promo gifts. From now until 30th of June, you will get 50 units of STI ETF, which is worth $198 when you deposit and maintain 50,000 Singapore dollars of fresh funds from account opening date. Depending on when you watch the video, the welcome gifts may have changed, so always refer to the latest T&C document. Now let's move on to the actual interest calculation on the first $100,000 because this is like the standard tier across other high interest savings account. And starting with the base interest, it is 0.05% per annum. And then with salary credit, you get 1.5% per annum. Then with card spend, you get 1.5% per annum. For insurance, you get a higher 2.5% per annum. And lastly, for invest, you also get 2.5% per annum. So it is really a very simplistic account. There are no tiered interest. As long as you fulfill that category, you will get that eligible interest. So if you sum up all the numbers together, you will get up to 8.05% per annum. Also, if you don't want to miss updates like this, I always do these updates on my Telegram group of over 20,000 members. So join us if you haven't in the Honey Money SG Telegram. Let's go through each of these separate categories and how you can optimize it, starting with salary credit. So it is a very standard $3,000 salary credit, which can be done through Gyro, PayNow or FAST. And to be clear, this is your net salary credit of $3,000. So your gross salary should be much higher, credited by your employer because you have to account for CPF contribution. Also note that it only counts the Singapore's dollar salary deposit to your bonus saver SGD account. Next one, on the card spend of $1,000, it is not on any Standard Chartered cards. It is only on the bonus saver card. And bonus saver, it can come in either credit or debit card. And there are zero rewards like cashback, miles or points when you spend on the bonus saver card. So you have to be aware that it has opportunity cost because you earn nothing when you spend on this card. There is also a list of exclusions which you can refer to the terms and conditions. And that includes top-up e-wallets, AXS, some government agencies like ICA, MOM, LTA, and many, many more. And so far from this document, CardUp and iPayMy are not excluded for now. So if we look at the opportunity cost, I will actually use a 3% cashback as an equivalent because we could still use for CardUp or iPayMy. Therefore, on a $1,000 spend at 3% cashback, your opportunity cost is around 30 Singapore dollars. Take note of this number, we will revisit it later. Next, let's talk about insurance. And to meet the insurance criteria, you will need a premium of at least $12,000. And once you have purchased this insurance and paid your insurance premiums, your bonus interest for the insurance category will be valid for 6 months. But I guess that for majority of us, we don't often go out and buy insurance, right? Especially on the banking platform. So most of you will not be able to hit that additional 2.5% per annum. So I'll mark it as not applicable to majority. But if it's applicable to you, good for you. You get additional 2.5% for the next 6 months. Let's go to the final category, which is investments, because something has changed. In fact, it actually got buffed. Previously, it was only unit trust, but now online equities is also eligible if you hit the minimum subscription or purchase of $20,000. So once you have purchased unit trust or online equities of minimum $20,000, you will get 6 consecutive months qualified for the investment category of 2.5% per annum interest. And yes, I did my own research on the unit trust portal. There are no familiar names like Fullerton, Lion Global or Nikko AM Shenton. Then for the 20,000 online equities, this is something new, and especially to those of you who are already buying equities on the Standard Chartered platform, I think this is really good news for you because you will just continue your investments, right? Just buy $20,000 the next 6 months, no need to worry, you will fulfill that 2.5%. And to be clear, it is valid for foreign currency investments as well, like US dollars if you want to invest in like US market or even other international markets. So the value will be tracked by converting to SGD at the prevailing foreign currency exchange rate. And in order to trade for equities online on Standard Chartered, you will have to open their Standard Chartered online trading account, which you can also use the link to sign up. And as a welcome gift, you can get 2 Intel shares worth $52 upon fulfilling the requirements as per the terms and conditions. Now, if you're curious about the pricing on SC online equities, here is the pricing. For personal banking, it is 0.2% for SGX and 0.25% for all other markets. But there is a minimum charge of $10. For priority banking customers, you enjoy an advantage rate. And the best part is there is no minimum amount, so it is really good if you want to trade in smaller amounts. So if we just look at the standard customer, we are paying around 0.2% if you want to buy SGX stocks, right? So 20,000 multiplied by 0.2%, it is around $40 of fees. That is the opportunity cost excluding any profit or loss from the trade. So what is the realistic return then if we combine all the interest rates and the eligibility as a standard customer? Here it is for the card spend and salary credit, which is 0.05 plus 1.5 plus 1.5, give you 3.05% per annum. And if we were to extrapolate it in a 30-day period for interest calculation, it will be 100,000 multiplied by 3.05% multiplied by 30 divided by 365 days, which equals to $250.68. But remember, we have to take out the opportunity cost, and especially for the card spend, which is $30. So that's $250.68 minus $30, which is $220.68. So if we were to annualize it, the effective interest rate will be 220.68 divided by 30 multiplied by 365 divided by 100,000, which gives you 2.68% per annum. So suddenly it doesn't look that good anymore, right? 2.68% per annum, just slightly above CPF ordinary account interest rate. But let's take a look if we add one more investment category. So salary credit plus card spend plus investment category. We just use the previous 3.05%, add an additional 2.5%, we get 5.55% per annum. Sounds really good, right? So based on the 30-day period, here is how much you're expected to receive. $100,000 multiplied by 5.55% multiplied by 30 divided by 365, which will get you $456.16. But remember, we have to take out the opportunity cost, and this time from the card spend as well as the trading fees. So that's $456.60 minus $30 for card spend and minus $40 from trading fees, which will net you $386.16. So effective interest rate, if we were to annualize it, is $386.16 divided by 30 multiplied by 365 divided by $100,000, which will give you 4.7% per annum. Is 4.7% good enough or not? That depends totally on your situation. To me, if you're really investing in equities and you don't mind paying some trading fees to Standard Chartered, as well as you understand the opportunity cost of spending on your bonus saver card to get that 5.55% per annum simple interest, I guess it is a fair game, right? I think it's fairly good. But on the other hand, if you're not trading online equities, you are just fulfilling the salary credit and the card spend, you're getting effective interest of around 3.05% before opportunity cost. I think that is just very mediocre, not worth a try. At the level of 3.05%, I'd rather just go with UOB One account or OCBC 360 account, both also offering at 3.3% per annum, with similar criteria, right? Salary credit, card spend, and maybe some savings criteria. Also, if you're new to bonus saver, I think it's not that bad. You get like 50 shares of STI ETF. It's worth very close to $200. So it's almost like free money that you can sign up and participate. And it makes sense, right? Because they are trying to push you to use the Standard Chartered online, which means you probably need to sign up for the trading account as well in order to get the shares. So that's how they market it. And to be very clear, even if you have other Standard Chartered products like their credit card or other bank accounts like eSaver, you are still eligible for the bonus saver account, because bonus saver account welcome rewards is only unique to its own, right? If you own other Standard Chartered accounts, you can still sign up for bonus saver account, get the welcome rewards, as long as you have not held or cancelled any bonus saver account or card for the past 12 months based on the T&Cs. And to be super transparent, this video is not sponsored at all. It's just that I saw this account, I just want to analyze it and review it. So one way to help this channel financially is either signing up through the link, or you can click the Interactive Brokers link below or scan the QR code lah. If you don't prefer Standard Chartered, you want to support Interactive Brokers, both are okay to me. And if you want to know, other than Standard Chartered, UOB or OCBC, what other high interest savings account are still good, then I can refer you to my previous video right here.